Bang! We are live with the first episode of the new show titled Money in Motion. It's either going up or down, clearly.
There's
Um,
always motion, that's for sure. And we're going to break it down for you guys every morning, 10 a.m. Eastern Time. Myself and CJ will do our best to break down the various movements in the markets, whether it be crypto, equities, commodities, FX, derivatives. We like to cover a little bit of everything. Um, on that note, CJ, is there anything you would like to kick off our premiere episode with?
I think we should talk about the DXY to start if we're talking about traditional assets because that's been one of the top movers this week, namely with the Japanese yen has had one of the largest short squeezes that we've seen over probably the last year and a half. It's been moving a ton. Let me bring it up real quick. So running into a little bit of resistance this morning, but the past 3 days have really been pivotal in terms of the price action of the DXY. We've seen, really lower highs, but now we are testing that support level and could potentially see a rebound in the dollar. Either way, we'll see. I have some assets I can talk about in terms of COT data and which positions kind of have, you know, asymmetry within their positioning. And I think following this rapid move in the dollar is an interesting time to start taking a look at those. So maybe we'll hit some of those towards the end of the show or, in the community with a little bit more detail. But any take, Monte, on DXY and kind of its relation to price action within Bitcoin and equities?
Yeah, I think that downward sloping trend line that you have drawn out there kind of tells the tale of the weakness that we've seen, over basically all throughout 2023, right? At the start of the year, we had that onset of strength that marked, the 105 level. Since then, that level has been harder and harder to reach. As you can see, in the middle of or at the start of June there, we climbed back up, retested the downward sloping trend line, but didn't nearly reach the highs we reached at the beginning of the year. And then once again, here at the start of July, nice uptrend, then quickly retraced at an even lower level, unable to get above 103.5. So, I mean, everything about this spells weakness, but taking a short right here, I think, is a bit risky given the fact that it is, flashing signs of a potential reversal just in terms of like candle formation here. And it is at the previous lows that were set in the middle of June there at like the 16th or 17th. So maybe wait for a breakdown below that level and then play it down to the 100 level. I think that's something that you could plausibly do. But yeah, that's essentially what I'm seeing right now for the DXY.
Yeah, I have maybe a slight idea for longs in the dollar in the futures markets, but not dollars, just a specific dollar pair that I might share towards the end of the show because it does kind of fit the criteria within um, our futures trading system that would kind of validate a long or a short trade in this particular instance. So maybe we can get to that in a little bit later. But first, I want to pass things over to you, Monty.
Yes, let's talk a little bit about crypto, CJ. What do you say? Let's talk about some Bitcoin, let's talk about some ETH, let's talk about some altcoins, because there are some pretty drastic moves going on. And I know this is our first show, so some of you may be, seeing some of these analyses for the first time. Oops. Um, but let me just pull up my screen real quick and we'll dive right into it. Starting with Bitcoin, right? What we're seeing today isn't exactly encouraging. And I think, if you look at what we're seeing from the Qs, you'll understand why Bitcoin is kind of behaving this way. Really ugly hourly candle here on the Qs, and I think that's translating into negative price action for Bitcoin because Bitcoin last night, or into the market open, looked like we could have potentially had some strength. Right, this is the hourly chart. Excuse me. And it looked like we could have had some strength into today. That was promptly rejected as soon as the Qs put in that big bullish engulfing candle. So clearly the Qs are playing an important role. Keep an eye on those in terms of directionality for Bitcoin. But I'm not too convinced that Bitcoin is going to have a positive day. And take what I said about Bitcoin and, you know, multiply that times 1.5 for ETH. I think ETH will underperform Bitcoin today. We had talked about how this level here at 1865 is such a highly critical level for ETH in terms of volume at price. It is the most significant level for ETH. You can go all the way back um, to look. I mean, look at it, how far back this level has been critical in terms of either supply absorption or in certain cases, like here, distribution. So now that we're testing this level, this certainly does mark a breakdown level, and would, if we do go below it, I think it's kind of a nonstop move down towards the 1850 level. So that's what I'm seeing for ETH and Bitcoin, both of which I think will finish red on the day. And I think we may see ETH here run the lows of 1850. If that is the case, however, I'm not going to be shorting ETH. And let me explain why with an example. Comp. Look at this chart. Okay, so we talked about this last week on Trading Rebellion. And so look at this, basically, look at this formation that we have here, right? Downward sloping trend line head. Oh, what color is this line? Is this a white line? Why is it white? All right. So look at this downward sloping trend line, right? Everyone was looking at this. Everyone was looking at, oh wow, this thing's unable to break above, its highs, and the trend lines are important. They give you an idea of relative strength and weakness, but when you see this sort of tightening of a formation, and I talked about this yesterday at Trading Rebellion, and I utilized Bollinger Bands as a means of kind of depicting that phenomenon. When we have this pinching of the Bollinger Bands like we got here, it typically is precursor for a large move to the upside. But what's more important to me is funding rate, and a great source for that is coinglass.com. And comp still overwhelmingly negative funding rate. And on the back of that, there have been some massive liquidations. So this is what I was talking about when we were talking about it last week, right? We're talking about how it reached funding rates that I hadn't seen reached by an asset in a very long time. Not since Luna Classic was crashing had an asset reach such a negative funding rate. And what this means essentially is that there's a high demand for shorts. People are looking to short the market, and they're willing to pay a bit of a premium, particularly 0.03% premium, in order to enter that short position. So what that tells us is that it's pretty crowded. And you can see it here, right? And that's when we were talking about it last. That was right around here. And of course, it did pull back slightly. This right here is the biggest trap you'll possibly see. Pull up the GIF of Admiral Akbar saying it's a trap, because this right here, like, had everyone and their mother trying to short this asset after what had been a parabolic move kind of out of nowhere, only for it to get squeezed even higher. And then we had it happen again, right? The funding rate got reset, and it actually went back towards zero, which is indicative. See, you can see it here. It actually flipped positive briefly, right? And then people got short again, and they got squeezed out, and price went down, or they got squeezed out and price went up. And then now today, again, people are overwhelmingly short, which leads me to believe that this, already has shown signs of overwhelmingly positive price action. But I would not short this asset simply because of the overwhelmingly negative funding rate. You'd be hard pressed to find. Binance, that's one that's also worth mentioning today. Very, very
Can I
Negative.
can I just say something? Out
Yeah,
of all of the money that I've lost trading, I'd say the vast majority of it has come from trying to short either the stock market or the cryptocurrency market. And when you just step back and think about it, like on a lot of these short trades, like comp or for instance, like BCH, you're looking at capturing like a 20 to 30% down move. And maybe if it goes through a full retrace, yeah, like let's say that goes down to where the move initially began. That could take 3 or 4 months and you're making like, 40 or 50%. Whereas from the bull side, if you have, assets like Solana that are doing, 3% a day or something like that, just playing it from the bull side is so much better from like a risk reward perspective. And like it tells you immediately in many cases when you're right from the get-go. Like if you would have long Solana at the bottom, or not even at the bottom, just after it kind of created the first deviation and led to some continuation, then that's a good trade. That's a good. I would much rather try to catch a trade like Solana than something like shorting, a Bitcoin Cash or a comp, even though they will likely retrace. It's just the risk to reward in this particular market environment isn't worth it. And it's interesting with the funding rates that Monte mentioned. Like everybody's still trying to short it because everybody's still in the mindset of like, oh, we see something go up, it has to mean reverts. And then all that may be true, but I think there are probably still better opportunities to save your capital for, or at least what I'm doing. Um,
yeah, I completely agree with you, CJ, and I think that you're not alone in that fact. Clearly, there are many crypto traders that have lost, and this is not an exaggeration, billions of dollars, trying to short crypto assets, and that's evident from these big moves to the upside. These are $100 million moves being made on the back of shorts getting squeezed out. Last one I wanted to talk about before I pass back to you was um, Binance Coin. Where is that on my watch list? Here we go. BNB. This one is particularly interesting. Yesterday had a really nice day, yet is still stuck in this range. And if you look at CoinGlass, oh, actually, I had two more things. Sorry. But if you look at CoinGlass, um, and we look at Binance, negative triple sevens. If you're a numerologist, that's lucky. Just kidding. But 0.07% funding rate, that is pretty crazy for Binance Coin. I mean,
can we get the
obviously it's
chart?
not.
Could you pull the chart up of the
Yeah,
funding rate, please?
yeah, no problem. It's obviously not as bad as comp, but for Binance, you don't often see it uh, reach those sort of levels. We saw it back here, right? And look, you saw it; it marked the bottom when we had the most negative funding rate, and I think we're doing something similar here. Now, have we reached the peak of negative funding? I don't think so. I think price can continue to climb higher while funding continues to go lower and people try and continue to short this thing. And it just goes against them. So just quickly going back to this list, one last thing. Look at Bitcoin's volume, up 65% in the last 24 hours. That is really interesting. And I think also very encouraging, I'd say, because prices maintained that 30K level, and we're seeing that much volume in 24 hours, or that much of an increase in volume in 24 hours. Now that could have been because yesterday was lackluster, but it doesn't appear that way with $32.37 billion worth of volume in the last 24 hours. That's a significant period of trading. But look at Matic, up 112% in terms of trading volume, $1.06 billion worth of trading volume in the last 24 hours. So let's take a look at that chart just to wrap things up for me before I pass it over to you, CJ. Matic. Now, take a look at this. It's got a positive funding rate. And remember what CJ was talking about earlier with Solana, right? And how, even if you didn't paint the bottom perfectly, there were opportunities to get in and see continuation. I think we're seeing something very similar with Matic, right? It pulled back here and then continued to climb higher. So we have these series of higher lows. That in itself is encouraging. The fact that we broke above the critical 0.71 level, where we had this wick and then also these two candles, is also encouraging. And I think that this one could plausibly make a move up to about 0.89. I would likely get out before then, look for about 0.86, or actually even lower than that, probably 0.85 or 0.84, 0.85, right around that level. With 3x leverage, that's a really nice trade. And I think that is something that we could see happen as soon as, the Asian session. And all of that is based on the fact that people aren't trying to short this thing. So any spot buying that happens will be reflected in this chart in genuine strength. And same thing for any longs that are bought. People are going to try and long this thing, and um they'll have to pay a slight premium, but it's relatively neutral. And that's what I want to see for an asset that could particularly make a short-term move to the upside. And I think Matic is certainly in the case. It ticks all the boxes that I'm looking for in terms of one being volume, right? So it has a massive increase in volume, over 100% increase in volume, $1.06 billion in volume. It has a series of higher lows, and lastly, it still has a positive funding rate. So all three of those things are the three things I look for in terms of establishing a long position. And I think that Matic actually really kind of checks off all three of those boxes. So that's what I'm seeing. And until we start to see that funding rate get negative, like we've seen with BNB or with BCH or with Comp, I think Matic could plausibly continue to run. So I'm staying in that one for the time being, but I will pass back to you, CJ.
Yeah, I'm just looking over some charts very briefly here. Yeah, so we have futures and Bitcoin and things of that sort. But then there's also like kind of the non-correlated approach, or the approach that really focuses on like COT futures. So just to talk about some of those particular setups and things that we could be looking for in terms of like asymmetries within positioning. Mexican peso is one that has been interesting. It's really trended against the US dollar, obviously, ever since 2020. But as you can see, there's been a lot of commercials getting short over the past, like, basically month or even longer. Ever since May, commercials have really entered this phase of distribution. And if you look at the COT data, you'll see that, with green, we have large speculators. They're clearly very long. Retail speculators are still very long by the yellow here. And then commercials, which typically, we like to follow and mirror, are short. So with that being said, you look at some of the assets, maybe not in the DXY, but things that have performed, kind of interesting relative to the dollar. Dollar's had a horrible week, as we've discussed. It's really broken new lows, and we've seen a lot of assets rip to the upside. But despite that, Max or just pesos in general really haven't gone anywhere. They've been unable to break that prior high. So at least risk is defined at this particular point for me. I like the fact that we're seeing kind of a series of these lower highs, and there's clear invalidation. Say right above here. If we run those highs, there's no reason I need to be remaining in that trade. Can always look for a different opportunity if it comes to get long, but I like the deviation here. I like the hold from resistance. Good technical formation, and the COT data obviously backs it. And when you think about the relative weakness, if the dollar rebounds at all, I would say, peso is probably going to take one of the largest hits, at least in the short term, because it hasn't showed like strength when it should have. One we've been talking about in the community a while, as well, has been coffee, because it's demonstrating like those very similar like characteristics, except from the inverse perspective. So instead of commercials in a state of distribution, they're in a state of accumulation, similar to what we saw at the beginning of November before we had kind of that snapback rally. It wasn't immediate. We obviously did have another flush to the lows, which is possible here. We could, if we close on the lows, we definitely could flush down. But if there's a short squeeze, we're probably going to get one of these rips of 10 to 15%. And that's something that I would like to try to capture, or at least be in the position to capture it if it comes. So something I'm just kind of watching there continually, but hasn't really shown any strength just yet. And then the final one I would say would be the 5-year futures, or T-note futures specifically. When you look at yields in general and just the treasury notes, like nearly all of them, aside from maybe like the 20-year, are very crowded in terms of their short positionings. Retail, nearly everybody wants to get short this. Retail actually was long things like TLT up until this week, where they finally capitulated after that move in TLT. I don't know if you guys saw that, but it was pretty staggering. Let me just bring it up real quick. Yeah, so I mean, it broke to yearly lows. Now it's starting to rebound. So I actually think now might actually start being the bottom, but we'll see. Either way, ZF is kind of interesting from that perspective. I think if you were to look at the characteristics of those three assets and their trade setups from a technical perspective and from a COT perspective, they're all kind of aligning to at least what my process is for attempting to generate non-correlated returns. So those are the three setups I would be looking at. I don't think it's possible to really copy trade anyone, because, like let's say I put 1% on a position, it goes down, or let's say, for instance, I hit 3 trades in a row and you think I'm a genius or whatever, and then you're like, okay, I'm going to lever up and put 3% on this trade instead of putting 1%. And then I lose the next 3 trades and you think I'm an idiot. And then by the 4th trade, you're afraid to put the 100 basis points on, and it just goes on and on like this. So it's very difficult to really copy trade anyone, specifically because of position sizing and conviction levels over time. But I think if you can take these setups yourself and kind of pick your spots, I think it can help you in your own trading, especially if you're going for things like non-correlated returns, because that's like the holy grail of investing, really, in my opinion.
Yeah, I mean, absolutely, especially when you're talking about markets as volatile as the ones that we deal with. You need non-correlated returns, because we can't rely on the Qs to carry Bitcoin or Bitcoin to carry the Qs. It's just not going to work that way. And looking for those opportunities is everything. So good stuff. And that is all we got for today. Thank you guys so much for tuning in for our first episode of Money in Motion. Please don't forget to like and subscribe. It really helps out the channel. And also don't forget, you can try out Trade the Chain at tradethechain.com. 14 days for free. You get access to the whole dashboard and also a Discord community of traders from all around the world, including myself and CJ, where we share weekly insights and a whole lot more. Really appreciate everyone turning out for this first show. But CJ, I'll leave you with the final word, my friend.
Yeah, appreciate it. Looking forward to the new format, and would always love to take questions as well at the end of the shows if we can hit 1 or 2 of them. Always appreciate you guys tuning in, and love to hear your thoughts. So, what's up, Joe? Had a nice conversation yesterday. But anyways, hope you guys enjoyed, and we'll see you next time. Take care.